All right, we're gonna let the 5-minute pull back to the 20, I think. Okay, let's let that get congruent. And then when we have that, I think we will look to take this up. And our target's going to be this left behind liquidity for the first, which we have London and Asia's high that got left behind there. But I want to see a pullback to the 20 and the 5, and then I would love to take it. And we do have an imbalance here. And so we'll let it pull back 78% into that imbalance, which would be the 20 moving average, and then take it up. That's what I'm looking at. All right, that's the plan. If it doesn't touch that 20 moving average in the 5-minute time frame, I'll take it. So good. We've actually got quite a few imbalances here, don't we? It's interesting that we seem to have left this one behind entirely, so that's interesting. That makes me wonder. Alright, so even if we get a pullback to 78% on the imbalance, that's closer to where price action is at now. We still potentially have a reason to move all the way back down to that level, which now makes that trade risky to take it before a pullback down there. Okay, and then when we look in the higher time frame, when we look at the 15-minute, there's a huge imbalance at 20.095-ish. Which would put us in the range of this right here, this imbalance. So I don't know that I don't think I want this one anymore, because the likelihood of us pulling back to this one is really high. Okay, well, okay, there goes that. All right, I just have to be patient. Okay, so I hate that. All right, I guess that's fine, because even if the market takes off without us, boys and girls, and it takes off up to the left behind liquidity for 10-1, Asia and London, and possibly even 927, there's a left behind liquidity level up there at 2396. If that happens, then we'll have even more confluence to take it back down, because we know that there's a huge imbalance that's been left behind on the 15-minute that's been made very clear. And again, you can see it in the 5-minute as well, but it's gigantic in the 15-minute time frame. Let's check ES real quick. ES looks good. I just always like to check to see, make sure no gaps. QQQ. What the hell? Oh, I hate that. QQQ looks a little bit confusing. Oh man, I'm gonna have to study this chart this weekend. It makes gaps all over the place, and from what I can see, whatever the reasoning, they're always getting filled entirely, it looks like. Which makes me very bearish now, because we have multiple reasons to trade down. Hold on, double top. Fair value gap pulled into. We know we have to move down for the imbalance. And suddenly extremely bearish. And we've got this ledge of sorts that's been made, triple top that's been made on the stock. I think this is the imbalance there that it probably pulled back into. This is not a good entry, but because this would be late. So what we need to identify is, there's the breaker. I think it's around this area here where all these wicks have been made. And what is it, 2263? That's just the high. And 2246-ish. That's London's level. And that actually happens to be right where the fib. Okay, that's interesting. All right, I think I want to get in a short. I just don't know where the hell to get in at. I mean, I do, but I guess I think I'm being a little rushy, a little greedy. We would need a pullback to get in it. All right, we would need a pullback to about 22.4650. That's what we would want. Let's see if we push up there, because if we push up there, then we have multiple imbalances to come back down and close. So let's see if we can get a push up back to that level, and let's see how overextended we look if we do get it, and then if that's the case, then we just run the power of 4 from there. Yeah, the problem with this is the thing that I hate really is that this move started before the open. So really this move started around like 9 a.m. We got a retest at 9:17. And so it's like I either have to wait for it to pull back to that level, which it may or it may not, but it may, or or I'd have to take a chance at getting in on some kind of imbalance, which I'm not a huge fan of, especially not when there's key levels just above that it could pull back into and wreck me on. All right, so we hit the 78% level on this upper imbalance. I'm not going to take this because I don't, we have a lower imbalance that's a lot more significant that we at some point I know are going to run back into, so I'm not going to take this one. But what I'm hoping to see right now is to see us bounce off of the 78% retracement into this imbalance, move back up to London's high of the day around 22.4650, and then power of 4 back down into the 15-minute imbalance. And if it doesn't do that, then it's probably just going to take off to the bottom side and we just don't have an entry, so we just miss it. I'd be willing to bet though. I'd be willing to bet we get some kind of pump from here. Bro, Tradovate has got to chill out. What the fuck? I'm not, and let me just change this number just in case. I'm not in the mood to see no crazy shit at all. We don't need no problems. All right, looks like we missed it. It looks like it's just gonna run down. That's unfortunate. That's a big move. All right. I'm salty. I'm definitely salty that we did not get an opportunity to, a good opportunity after open to be a part of that. All right. All right, we're waiting to see the pullback. Now I have to be looking for, all right, well, when we do hit that level, where do I see us going? Do I think it will just continue to push through it? Do I think we will move back up? We have liquidity up at the top. We have some pretty significant liquidity that's been left behind, but it's old liquidity. So it's like could get hit today, could get hit next month. We don't know. So there's that. But if we pull all the way down to the 78% level of this imbalance, then we've got New York's previous day high, which could become a swap zone, right? So instead of us possibly, looking for a short, it could become an area that starts to provide support, and we move up from there. Fucking easiest trade ever. Jesus Christ. Alright, I gotta get over this and just move on with my life. Alright, well, let's see. So we got the 200 moving average approaching, which is around for the 520.047, which would bring us all the way down to this area here, but there is nothing significant here. So if we make it all the way down here and we run the bottom candle that starts this imbalance, then I'm just gonna be looking for us to sweep London's low. I don't usually get this like edgy about like, missing big moves. I don't know what it is. Maybe it's because it's Friday, but I'm like, you gotta stay tapped into like who you are as like your personality, when you're trading, because like who you are and your trades and whatever, and even if it's not like normally characteristically, even if it's not normally characteristic of you, like just you got to pay attention to like your psychology and what's going on with you, right? So I understand that right now I'm really annoyed. I am like more frustrated than what I should be that I just missed that move. and really it's not a miss, it's that I didn't have an entry. Like, yeah, I figured it was going here, but like I didn't want to take a sloppy entry, and that's the right thing to do. But I think I'm just I've just been trading very, very, very carefully all week. And, you know, normally by the time it's like 10:30 Eastern time, I'm done trading. Like, and I've been trading very, very carefully because I'm running this case study. And I'm just like, okay, so missed this big drop. So now I know that means I'm going to be in the market for like longer. And I don't know, it's like a combination of being impatient and I don't know. All right, let me focus. So anyway, so I'm just trying to fucking get a hold of myself here and just make sure I can get back in the right frame of mind. Because if I can't, then I need to walk away. But if I can, then cool. And we move forward and just try to make the right decisions. Yeah, I don't know what has me. I'm just on edge. All right, so we hit the 78% level. And so the same as what I said just a few minutes ago, if we run the first candle, which I kind of think we're going to, we might not, but because we have bullish order blocks in this area. So we could just hit a bullish order block and move up. I don't think so though, because I don't think the level is significant enough. Or at least that's not something that I'm going to bank on to take a trade. I don't want it. So I'm going to look now because we hit the 78% retracement level into that imbalance and we kept going. So now I'm going to look to see, even though I don't want the trade, I'm going to look to see if we use, you see like this big block here, right? In the 15-minute, we've got multiple bullish order blocks, right, as well. So I'm going to look to see if we kind of come down and, you know, hit this level and bounce back up. But what I think, what I hope is that we run through this level. And then if we can get through that level, we can possibly get down to London's low and possibly Asia's low, which is right below it. And we'd have a power of 4 right in that area that we'd be able to take. So that's kind of what I'm hoping for. So let's see. We're just going to have to be patient and see what we get here. Nice job to anybody who was a part of that big drop right there. Congratulations. I hope you took your money and got the hell out of the market for the day. Because today is, we have currency contracts expiring. So I'm kind of expecting it to possibly be like a weird day because there's a lot of contract expirations for currencies. So we'll see. That's not something that I've paid attention to for like a very long time, really at all historically. So I don't really know what to expect, but I know that any day that you get contract expirations, especially a multitude of them, it's usually kind of a weird day. So let me look at VIX and CBOE. Okay, cool. They look congruent, and what I mean by that is they look to be doing the opposite thing as one another, so that's good. When they start doing the same thing, I'm like, I don't know if I want to be trading. All right, well, we wait. Why did that drop out like that? That looks really gross. Oh, man. Okay. Yeah. All right. We're waiting. I like for you guys to see the boring parts of the trading day, like, you know, not just like come to the video and then I'm just like boom in a trade, because what is happening here? Hold on. That's an entry opportunity right there. Is it contraindicated though? We're gonna go. We're gonna go, I think. Oh, no. Jeez Louise. Hold on. New York's previous day high being retested. Contraindicated to go up. Where else? Also there. Contraindicated to go up. Almost overbought on the 30. We have an imbalance that we have to pull back into. However, we just pulled into the imbalance. That's one reason not to take it. I can't come up with two. I cannot come up with two.
Order filled.
Order filled.
Okay. Give me just a moment here and then we'll talk about this entry. Retesting VWAP. Early break even. Yeah, because we're pulling back into an imbalance. And I'm only willing to take so much of a chance on this one. It either pushes or it doesn't. All right. We're going to have to talk about this in a minute because what am I going to target? I'm going to target probably London, Asia's low at 19, roughly 19,947.50. 19, not. Why can't I see? 19. Oh my god, look how far down that is. Look. Oh, hold on. 19. What the fuck? absolutely atrocious. Absolutely atrocious. Let's lock in a little bit. God damn. I want to work. Just trying to make sure I'm in with the right. Okay. Okay, where might we see a potential bounce? This could give a potential bounce right here. But we're already past the 100, so I think we're gone, boys and girls. I think we are fucking gone. We might not be though. We might not be. This could be just an absolute banger and we could be done for the day. So you know what? We gotta hold frame. We gotta hold frame and just let it push. We gotta just hold frame and let it push. All right. My limit order is not correct though. Hold on. 19,948. All right, that's where it should be. I'm in on a top step trade too. So let me correct this one. 19,948. All right. All my signals are saying that we are not going to go up. We've locked in a little bit of profit, but we hold frame. We hold frame. Where's my okay, so I see we have a 1 minute imbalance. Let's switch this over so I can see that more clearly. All right, you see this 1 minute imbalance right here? We are absolutely 100% gonna pull back into that, and I hate that, which means that I kind of want to, now I want to get out of the trade. I know the market's gonna want that. I know the market wants that. Will we be lucky enough to just see it push down? I don't know. It's looking very bearish. Like everything says that we're definitely going down, but that does not mean the market won't pull back into that imbalance and then go back down. Trying to decide. I'm gonna stop out. If I get hit, I'm just gonna stop out.
Stop filled.
All right. And I'm gonna do that so that I have profit locked in. And then we have an opportunity to get back in I'm doing that today because I'm just kind of, yeah, you know, kind of just not. I'm just feeling very impatient. All right, so we're gonna let the market pull back. It's gonna pull back quite a bit, I think. It's gonna pull back into that. Okay, so we probably have an inverted fair value gap. And I will tell you this, like, I was very indecisive on that. Like when I when I noticed that imbalance, you know, you pretty much know that the market is going to pull back into it. And if I wasn't going to just move my stop up to give it room to run, I probably should have just gotten out as soon as I realized that imbalance was right there. But we have another opportunity to get back in it, so we'll just be patient. And to be quite frank with you, that was not a plan. That wasn't a planned trade. I just saw what was going on. So I mean, it's just extra, I guess. So I'm not like crazy happy with how I managed that trade. I wish I would have. I thought very quick on my feet to get into the trade, but I didn't think very quickly in terms of like when I noticed that imbalance, and if the decision wasn't going to be to just hold, then I should have gotten out of it sooner with more profit, but it's okay. That's also the problem too with like, that's also why I like to put myself inside of a 3-to-1 box, because when you do that, it's hard, like no matter how much of the move you missed, it's hard to be mad at yourself. And I'm trying to think like where I got out. Where did I get out? Like somewhere around 20.063, something like that. So I definitely messed up my 3-to-1. That could have just been a nice eat. I'm having a rough day just inside my head. It's a rough one. This is one of those days, like if I were to take a loss, I don't know if I could handle it. Like because it's Friday too, I'd be pissed. I'd be pissed. I might need to get out. my head isn't it's not where I want things. I know it's not. I'm not where I want to be mentally today. I'm considering being done trading because I just don't like where I'm at. I feel like if I take a loss, I'm gonna be irrational about it. I don't know if I'll have like the mental fortitude to want to like take another trade. I don't like where I'm at mentally, guys. I might have to just tap out for the day. And the more I think about it, the more I'm leaning into that. Yeah, I think I'm done for the day. I think I'm done. I can't get any more trades. All right, at least we got one in. It didn't go. I didn't manage that the way I would have wanted to, but we got one in. I do think this is a good opportunity to, it looks like that we're approaching a good opportunity to take it down to the liquidity at London's low and Asia's low. Asia's low specifically because Asia's low is just below London's low. So I think the market would, if it's going to reach for London's low, it's definitely going to reach for Asia's low. But let's paper trade this, all right? But I'm not gonna get in. I can't handle it. If I take a loss, I'm gonna lose my shit. I know it. I can feel it. And that's fair. That's fair. It's Friday. Like, it's Friday. I kept it tight all week. But yeah. Okay. So we have what we initially considered to be a bullish imbalance, right? For this was marked out from the 5-minute, but we know that the 15-minute coincides with this. Okay, this is basically our short right here. This is the entry. Boom. We called it. Let's mark it. We'll just say right there. That's our entry. And then the stop. If the entry is here, without even being super exact, we'll put it at the top of the inverted fair value gap here. If you want to keep it simple, we could get out here or just reduce position size, and ultimately we would want to get out of the position right about here. Okay, so that's the trade. This is the entry. We're gonna give it a couple candles. We're in the 1 minute now, so let's give it a couple candles to close. And then we can place a break-even stop and let the trade ride. If I did get into the trade, that's how I would do it. I think if I really meant to get in this trade, though, I do think I would have gotten in just a little bit earlier. Like, I think it would have been, is that 2102.75? 21. No, this is decent. It's not bad. Let's give it 2 1-minute candles closing that are not touching where the entry point would be. Okay, so this would qualify as the first one. So let's give it 2. So 1 more closing, and then we'll put, then we would add the break-even stop. I don't know how to make these like different colors, so it just is what it is. All right, we have 33 seconds left on the 1 minute candle. Three seconds left on the candle. All right, it's closed. So then right here, we would add our break-even stop. Now we have a free trade. You could either get out right here, or you could just reduce position size and then let it run to this actual level here. If we just made it like a 3-to-1, let's see, we called our entry at 20.093 even. So a 3-to-1 would put us at 20.033. which would be right 23.3 even would put us right there, which is probably like the safest thing in the world because that's before you even run the swing. And whatever your style is, right, you can choose to drag your stop, you can scale out along the way, you can leave your your break even stop literally at break even. So you can give the trade room to just run. In a situation like this, if you're super antsy, you can definitely drag your stop to to basically lock in your profit, or just do more scaling out along the way, because anytime you have like a fair value gap, whether it inverts or not, you can always kind of expect that the market might pull back into it multiple times. So it wouldn't be that crazy for the market to pull back up and give us another opportunity to potentially enter this again. Personal choice. All right, so we can see we pulled back into another imbalance made on the way down. Let's run the fib on it. So it didn't pull back 78%. I know 78% is not marked on here, but I can, to a degree, eyeball it. I know that's not a 78% pullback, so I'm sure you can tell too. And in addition to that, Tradovate is kind of worrying me today. Just stuff is looking weird. Anyway, in addition to that, there's also an imbalance right here. So we also have an imbalance right here. So we could just keep going if the momentum is there, or we could end up pulling back more. And pulling back more is not unlikely because we have a huge inverted fair value gap here, and then we've got multiple, it's made multiple on the way down. But it looks like the momentum is there and the market's just pulling it, so. How bad does it want that liquidity at the bottom? All right, so if you were in at a 3-to-1 risk reward, you would be out of the trade already. We would have hit it at 20.033. That would have been our 3-to-1 risk reward. This right here, 20.013. That would take us to a 4-to-1 risk reward. And you know, what I really want you to pay attention to is if you're someone that likes to drag your stop in every single trade, right? This is one of the things that people, I think, get the most triggered about when they watch some of my trades is they don't understand why I'm not constantly, like, at least lately, not dragging my stop, like just every single time we get into just a little bit more profit, right? This is what I want you to think about. If this is your entry, right? And every single time like you get a little bit more profit, you were dragging your stop, you'd have been out of this trade really, really early, right? So even with this pullback right here, right? This is why, like, preferably I just like to leave it at break even and let the trade ride. Because if I was like dragging it all the way, I would have got knocked out somewhere up here, whatever. Would have never gotten to a 3-to-1. Would have never made it there. And the truth of the matter is, like, most of your trades, like, if you drag your stop, you're not going to get a 3-to-1. You're not going to get a 4-to-1. You're not going to get a 5-to-1. Why does it matter? I'm going to tell you why it matters, okay? This is not true for everyone, because some people do like to trade 1-to-1s and they're very good risk managers and they have very high win rates on their strategy, so it balances out for them. But the more you take 1-to-1s or even less than that, or 2-to-1s, the higher your win rate needs to be. Like, if I look at my win rate, it's closer to like it's closer to like 55 to 60% over, I'm going to say, over the past, let's say 1 to 2 weeks. Okay. So let me just put it this way, because now I'm kind of losing my train of thought. My point is this, okay? If you're taking 1-to-1s, right? Every single time you lose a trade, then whatever your last win was, you've entirely lost all that profit. Okay? If you're consistently taking 2-to-1s, that's a lot better than a 1-to-1, right? That can make a significant difference. And I don't think 2-to-1s are bad, right? But if you take 2 losses in a row, then you've knocked out your one trade. When I focus on 3-to-1s, I have to lose 3 trades for me to wipe out all of the progress from one winning trade. Do you understand how powerful that is? So what it means is, I don't have to be afraid to take losses, because I know that my winners are going to clean them up plus some. I don't have to have a 100% win rate. I don't have to have I don't even have to have a 75% win rate. I don't, because the 3-to-1 is going to clean up the losses quite nicely. And so imagine how powerful it can be if you already have a good strategy and you're trading 3-to-1s consistently. And imagine when you get 2, 3 wins in a row. It's going to take a lot of losses to even put a dent in that at all. It sets you up in such a powerful way, it makes it less likely that you are going to fail. So if you're scared to hold trades, you really should think about this. You should be more afraid to take profit early than you are to be in a trade, hold your stop at break even, and just let it run to a 3-to-1. Now, if you trade a strategy where you're like, well, my trades don't go 3-to-1, okay, maybe that's different. I don't know. I'm not going to say those trades are not worth taking, but you have to think about longevity and you have to think about survivability. Okay, people out there who take trades and their risk is different every single trade, or their risk is different every day. Unless, I don't know how you're going to survive, because no one's in this game not taking losses. Everyone's taking losses. So if your numbers are all over the place, you're not going to survive. You're going to end up blowing accounts left and right. And even if you're blowing them slowly, you're going to end up blowing accounts. So no shade to anyone who's doing their thing and whatever, and it's working for them and they don't trade with a consistent reward to risk. No shade. But what I'm telling you, like, if you are a developing trader, you're not profitable yet, you're still trying to figure this out, I'm telling you that one of the most powerful things you can do is be a trader
who trades at least a 3-to-1. Trade a strategy that can get you consistent 3-to-1s, okay? Because it's just going to set you up for success. And get used to holding your trades. Get used to that early. Do it in the simulation environment so you don't have to be scared, so that you can give it time to see how this would have played out if you did do it, so that you know when you get into the live market with real live money, because money's not live, but you know what I'm saying. When you get into the live market with actual money on the line, you don't have to be afraid, because you know that over time, right? As long as you're trading with good reward to risk, you have good risk management, okay? You have a good strategy that you've back tested and it has a pretty good win rate, at least 50%, then you know that over time you're going to come out on top and you don't have to worry about it. So if you're just starting, do yourself a favor, use that as part of your framework to how you trade. I would not suggest that you go in and you start practicing 1-to-1s. Or even there's some people who trade with inverted reward to risk, right? Where they'll risk $400 to make $100. If you're trading like that, or if you have a teacher and they're telling you to do that, I'm telling you, like, I'm not trying to give you trading advice. I'm not here to necessarily mentor you. I'm telling you though, stop right now. You are a bad car crash waiting to happen. Okay? So just please don't do that. Please don't do that. Like, if you trade like that, you literally have to have like 100% win rate. You do. You can't afford to take losses. Because if you take a loss, that means you got to win 4 more times before you even make it back. Like, talk about stress. No, please don't. Please don't. Don't follow that kind of advice. Don't trade like that, please. Legally, I am not giving you trading advice. I'm not mentoring you. I'm letting you know, though, as someone who lost money consistently in the market for 3 years. Okay, 3 years. And now, more recently, right, this year, it's been great. But you know why? Because I trade with proper risk reward. I use strategies that I've back tested, that I trust, and that have a decent win rate, at least 50% or greater. That's why, you know, and I just, obviously, I understand fundamentals better. I understand market structure better. And I sought out mentorship, right? I sought out mentorship. And these things are just, they're very, very important. You can skip so far ahead of the line with getting good mentorship. I'm rambling, but I hope that I've said something here that helps someone out there critically think about maybe some of the things that they've been doing, something that could maybe help them moving, you know, into the future. Hopefully. If you don't like what I'm saying, that's okay. Like, it's okay for us to disagree. You do not have to agree with me. You don't have to trade like me. You don't have to listen to me. You don't have to come to the channel. You don't. You really don't. But for those of you that can appreciate the fact that I've put out a ton of transparent social proof when it comes to my trading, just trust me on the things that I've said over the past few minutes. Like, you want to set up a good framework, and that's a part of it. All right, I'm done rambling. Let's just see how this trade plays out. I mean, it's already played out technically. If you set up a 3-to-1, you already won. You're already out of the trade. But I do believe that we're going to go down further. So let's see if we get, at least let's see if we run this level right here. That would take us to a 4-to-1. And then we'll close out this video and just call it a day for Friday. Today is the 4th. It is the 4th. New York market, the exact time right now is 7, 8, 9, 10:38 Eastern time. All right, so things that I think could happen. Obviously, the market could just pull us down from here, of course. However, we do have imbalances at the top that have not been reached into at least 78%. So the market could reach back up and get somewhere inside of that inverted fair value gap before it moves down and continues to sweep these lows. So either thing could happen. If I were going to lean towards one thing, I would probably expect the market to pull back into the at least into the inverted fair value gap and then move back down. But if it wants it bad enough, it can just move down from here too. Either way, I'm anticipating a sweep on the liquidity below Asia's low, which again sits at about 19,948.75. Did I took the fib. Let me put the fib back on. So this is the highest imbalance that we have. So right in here, that's the highest imbalance that we have. And we'd be looking for, about a 78 at most. We would be looking for about a 78% retracement into that level right there, and then a move back down. Another thing that you commonly see too, like when you have these fair value gaps kind of stacked on top of each other, is you'll see that one, it will hit that 78% pullback, but then the other one, it'll just kind of barely pull into it and then move down. I see that a lot. And I guess just because I know everybody's not super familiar with fair value gaps, we'll map them out. Okay, so this is the highest one. And then the one just below is right here. Fucking eyes don't work. Right there. Okay, so we have like the bigger one. This is not necessarily the 15-minute one, but as you recall, the 78% level ran through this area here, so we know that they overlap. Okay, so this is from the 5-minute. All right, so this is from the 1 minute, this top one right here, and this is also from the 1 minute, this secondary one right here. Okay, so we see that it's pulled deeper than 78% on this one. Okay, the candle that I'm going up and down on. Pause. And then the secondary one, the higher one, we'll call this the first one, actually this is the secondary, right here. So this one probably makes the most sense, but it's already tapped into it. So we'll just see what happens. Do we get a rundown, or does it want to pull back a little bit deeper into it? We'll see. So 78% should be, if we're just eyeballing it, yeah, it should be about right where it just hit. So from here, my prediction would be that we're just gonna aggressively move down now. So that's another entry right there. And I'd have a break-even stop on that probably really early. And the reason why is because we have reasons that it could still reach up. We have New York's level just above here. And where's my... I don't know, the inversion looks pretty damn clear though. But yeah, I would definitely want to break even stop like right away. Like I'd already have one. And then if it pulled back, I would just wait for like another confirmation to get back in it, because I do feel pretty like sure about it, but and also, like, I hope this is a good example to somebody that, like, you don't have to take every single trade you see. Like, if you know you're not in the right mind frame, you know, like, if you're frustrated, if you're short-tempered, you don't have to, like, you could just paper trade. Yeah, it might turn out to be an absolute banger, and you're gonna be like, oh, I could have made my, but it's like, okay, but what if you mismanaged it because of, you know, where you're at psychologically? Or, I mean, who knows? It's just, if you know you're just kind of like on edge, why put your capital at risk? Why? Especially if you're already sitting on a W for the day. These moves, they happen every day. You have the opportunity to make money every single day. You don't have to force yourself into trading or force yourself into positions if you're just not, if it would be better for you not to. You just don't have to. I made the assertion that if, like, I didn't like where I was at mentally, I just felt very frustrated, like, very early on, short-tempered, And, you know, you can be right and still lose a trade. And I just knew that, like, if I took a loss today, that I might go on tilt quite easily, and I don't want to put myself in that position, especially when I don't need to, and I'm already sitting on a W. Like, it's Friday, like, let's just have a good weekend, you know what I mean? We'll come back and we'll start a fresh week on Monday, and we'll crush it. Power of 4 happens every day, multiple times, multiple times. And you know if the power of 4 is playing out on Nasdaq multiple times a day, you know it's happening on the other indices as well. And probably they probably set up a lot slower. Not, I don't know if I'd say that for ES, but definitely like the Dow for sure. All right, we're back into that. We're beyond 78%. Let's see if we respect this high right here on that candle. It looks like we're just gonna run it though. So we might be reaching for New York's level. Oh, and there's a slight possibility there's also a 15-minute bearish imbalance now too, which is like just as big as the bullish one was, which is interesting. And there's another curveball. Let's visualize it. All right, so you see that this was the imbalance initially that I was looking to see the market trade into. And this, right, the big block here mapped out in the 5-minute. But now we have a bearish imbalance. Yeah, so that makes it a little bit tricky there, doesn't it? So now we're back at New York's level. And we are overbought. The only reason I see that we would not go down is perhaps the fact that the market might want to pull back into this imbalance. So it's like, what does it want more? To fill the imbalance or to move towards liquidity? This will be interesting to see. What do I think? Damn, that's hard to say. So that last entry, I would have broken even, and if I had to make a decision about getting back in the trade right now, I don't know. I probably wouldn't. I'd probably leave it alone. Because if we did run down to if we did run down to the lows, London and Asia's low, I could take a trade back up that I don't have to question, a bullish power of 4. And if we traded back into the imbalance, then I could take a bearish move back down towards liquidity. And both of those would be like safer moves. But right now, I feel like the market could just kind of play with you. It's hard to say. And in the short term, like we see, 3, 4, we got multiple waves here, right? We're just like stair stepping up. So this is turning into, it's looking kind of like a semi-organized trend in the short term. Yeah, I would say like after that trade broke even, I probably wouldn't mess with this one, because I honestly I would not have the same level of certainty at this point as to where it's going. I just know the two places that it could draw to, and being that it's retesting New York's level again, we're probably pulling back to that imbalance, the bearish imbalance up at the top. I don't have the same level of certainty though, so it's not something that I would trade. I think we could do either. But if I had to put my money on something at this point, I think we're probably pushing up. Yeah, that's what I would say. I would say a move up into that imbalance and then back down towards liquidity. We haven't made it outside of this this fair value gap here yet though. We're rejecting right off of it, so that's interesting. I'm still gonna say up though. I think it's gonna run through. All right, let's let this go for just a little bit more, just a little bit longer, just to kind of get a feel for where it is actually going. And then I'm gonna just enjoy my life, enjoy the weekend. It's interesting because the top of these wicks, right? These wicks up here, this is where the New York level is, and the market is making it, I feel like this is engineered. Like the market is making it look like we're rejecting from here, but I'm telling you, I think we're gonna just blast right up. I feel like it's just engineering liquidity with these little small pullbacks, but it keeps moving up and running through them. And it would be the perfect setup too, because it looks like it's rejecting off of VWAP, and it looks like it couldn't make it past that fair value gap. Yeah, my money's on it running those highs. And those two highs right there, they're not exactly equal, but they're pretty damn close. And if you follow ICT mentorship, which I highly recommend you do, you can't unhear him talk about clean highs and lows and them being swept. You can't unhear it. Like right here, this Wix high and this Wix high, same thing. not exactly equal, but close enough. And what happened? It looked like the market was gonna move down, and it blasted through it. Bet you that happens to those right there. And then these levels are not like as perfect. Yeah, but that's what I think is going to happen. I think it's going to move through those quite swiftly, and we're just going to move up into the imbalance. If we run outside of this fair value gap, I'm going to just end this video, because at that point, and what I mean is this fair value gap right here, this high of this fair value gap, if we run this, we can just pretty much anticipate that we're running back up into the imbalance, because we've retested the New York level multiple times. We see all the blocks there. We see the orders building. We just ran it. Yeah, we're gonna run back up into that imbalance before anything else. All right, so that's where I'm gonna call it for the day. I hope that this has been a valuable watch for you. Thank you guys for joining, and I will see you, well, when this gets posted. I always post these the day after. So on Fridays get posted on Monday. So you guys will be seeing this on Monday. So I will see you on Tuesday. Okay. Cool. Thank you for joining. I hope I provided you guys some value. I hope you enjoyed. For those of you that come for entertainment value, I don't really know that you found any of that, but hopefully you got something out of this too. And I will see you guys next time. Thank you for joining. It's always good to be together. Love ya. Hugs and kisses.